What if I told you that right now, as you're watching this, you could be standing on the precipice of one of the biggest financial blunders of your life? I'm talking about Cardano. I'm talking about ADA. And I'm talking about a warning that, if ignored, could lead to tears in just 3 short months. You think you know what's coming? You think you've seen it all? Think again. Because what's unfolding behind the scenes for Cardano over the next 90 days isn't just a market shift. It's a seismic event that could fundamentally alter ADA's trajectory and redefine its place in the crypto universe. The clock is ticking. Are you ready for the truth? Welcome back, fellow crypto enthusiasts and truth seekers. You know me, I don't shy away from the hard questions, and I definitely don't shy away from calling out what I see as critical moments in this insane market. And right now, my eyes are laser-focused on Cardano. For months, many of you have asked me, what's the deal with ADA? Is it dead? Is it a ghost chain? And honestly, the FUD has been intense. But a seasoned crypto analyst, someone I deeply respect named Sssebi, has issued a stark, almost chilling warning. Selling your ADA right now could be the single biggest mistake you make all year. People who sell ADA now will cry so hard in 3 months. That's a direct quote, folks. And when someone with Ssebi's track record makes a statement like that, you sit up, you listen, and you dissect why. So, what exactly is he seeing? What secrets are hidden in the data that suggests such a dramatic shift is coming for Cardano in the next quarter? Let's dive into the core reasons why holding onto your ADA, despite the current market whispers, could turn out to be the most profitable decision you make in 2025. This isn't just speculation. These are tangible, high-impact catalysts that are already in motion or on the very cusp of happening. First up, and this is massive, a game-changer that many are still underestimating, the Grayscale ETF approval, and guess who's riding along? Cardano. Just recently, the US Securities and Exchange Commission, the SEC, those gatekeepers of traditional finance, gave the green light to convert Grayscale's digital large-cap fund into a spot crypto ETF. Now, this isn't just about Bitcoin, folks. This isn't just about Ethereum. This is about a basket of top-tier cryptocurrencies, and right there, alongside BTC, ETH, Solana, and XRP, is Cardano. Think about the magnitude of this. For the first time ever, a US-listed ETF is giving institutional investors big money exposure to altcoins. This Grayscale ETF isn't just another fund. It's poised to become the largest multi-token digital asset ETF globally, commanding over $750 million in assets. Imagine even a tiny fraction of that capital flowing into ADA. This isn't just some technicality. This is a regulatory stamp of approval, a signal to the giants of finance that Cardano is legitimate, it's secure, and it's ready for prime time. More institutional money means increased demand, and increased demand, my friends, often translates directly into a surging price. The floodgates are creaking open, and ADA is positioned right in the torrent. But wait, there's more. Much more. Because beyond its inclusion in this multi-asset behemoth, Sssebi points to something even more potent. The escalating odds of a dedicated ADA ETF. Yes, you heard that right. While a standalone Cardano ETF hasn't been approved yet, the betting markets, those cold, hard indicators of collective sentiment and informed speculation, are now placing the probability of an ADA-only ETF approval by the end of 2025 at an astounding 74%. That's not a small jump. That's a meteoric leap from just a few months ago. Why the sudden optimism? Because ADA's inclusion in the Grayscale multi-asset ETF proves the regulators are becoming far more comfortable with assets beyond Bitcoin and Ethereum. If a standalone ADA ETF gets the nod, imagine the impact. We saw what Bitcoin ETFs did, we saw what Ethereum ETFs did. Now picture that seismic shift, that tidal wave of new institutional money, specifically directed at Cardano. The price impact could be, and I don't use this word lightly, explosive. This isn't a what if, this is a when. And just when you thought it couldn't get more exciting, there's another major catalyst happening right now, the midnight airdrop. For those of you holding ADA, this is your direct reward for being a hodler. Midnight Network, a privacy-focused sidechain building on Cardano, is unleashing a staggering 24 billion night tokens in one of the largest airdrops of 2025. And here's the best part for us, ADA holders. 50% of all these night tokens are reserved for you. You needed to hold at least $100 worth of ADA or other major cryptos as of June 11, 2025. The claim period is already open, running through August, with tokens gradually unlocking. This isn't just a bonus, it's a direct incentive to hold your ADA. Why sell now when you're literally being rewarded with valuable new tokens just for sticking around? This airdrop is creating a powerful holding pressure, reducing sell-side liquidity and potentially fueling upward price movement. It's a passive income stream, a thank you from the ecosystem, and a clear signal that the Cardano network is expanding and rewarding its loyal community. Finally, let's talk about a broader market trend that could indirectly but powerfully boost Cardano, the rise of Bitcoin DeFi. At the recent Bitcoin conference, the whispers, no, the shouts were all about Bitcoin's evolving decentralized finance ecosystem. BTC is transforming from a passive store of value into an active financial tool lending, staking, trading. As Bitcoin DeFi explodes, it inevitably leads to more cross-chain activity. And what's one of the blockchains perfectly positioned to integrate seamlessly with these expanding ecosystems? That's right, Cardano. Cardano was designed with interoperability in mind. Its robust architecture and ongoing development make it a prime candidate to bridge with the burgeoning Bitcoin DeFi landscape. This increased interaction, this flow of capital and innovation between two titans of crypto will undoubtedly bring new attention, new users, and ultimately more value to ADA. It's a rising tide that lifts all technically sound, interoperable boats. So, let's recap, shall we? You've got the Grayscale ETF approval bringing institutional eyes and money to Cardano. You've got the soaring probability of a standalone ADA ETF, a potential game changer that could flood the market with fresh capital. You've got the massive midnight airdrop directly rewarding loyal ADA holders and reducing sell pressure. And you've got the expansion of Bitcoin DeFi, creating an environment ripe for cross-chain collaboration with Cardano. Each one of these on its own is a significant bullish catalyst. But all four converging within the next 3 months? That's not just a prediction, it's a strategic alignment of events that could fundamentally alter the landscape for Cardano. Sssebi's warning isn't fear-mongering, it's a wake-up call. He believes, and frankly after dissecting this data I agree, that selling ADA now means missing out on one of the most substantial opportunities in the crypto market this year. If you're bearish on ADA at this moment, you might be ignoring the writing on the wall, etched in the very fabric of market movements and regulatory shifts. The next 90 days are critical. They could define Cardano's future for years to come. Do your own research, but understand the profound implications of what's unfolding. What do you think? Are you holding your ADA? Are you accumulating? Or are you letting this opportunity slip through your fingers? Let me know in the comments below. Hit that like button if this video gave you some new perspective, and subscribe for more deep dives into the crypto market's most pivotal moments. Now a quick but crucial disclaimer, as always, the cryptocurrency market is highly volatile. Investing in cryptocurrencies, including Cardano, carries significant risk, and you could lose all of your invested capital. This video is for informational and entertainment purposes only, and does not constitute financial advice. Always do your own thorough research and consult with a qualified financial professional before making any investment decisions. Never invest more than you can afford to lose. Stay safe out there, stay smart, and stay vigilant.